good afternoon, Monique. I want to first thank you for agreeing to this little grand experiment of mine. You are going to be episode number 2 of Chea Chats. And in this edition,
Oh.
and it's also a good way for me to introduce, my team, and you are, one of my anchors, quite frankly. And I'm just very, very pleased that you're able to join me this morning to talk about what we're going to talk about today, which is lending in the time of shelter in place.
Thank you. Thanks so much for inviting me.
Oh, of course, of course. Just as an introduction, we've been working together, I'd say over 7 or 8 years now.
Yeah.
Since we were down at the bottom of the hill there, and I just have to say that you are probably the most passionate person that I know. You are the most empathetic person I know, and you are truly an advocate for your clients. So I just want to thank you very much for everything that you do.
Thank you.
And just the fact that you're a singer and you're always singing to us. We love that. Please do not stop. So Monique, let's get into it. I guess we're into it now for the 5th week. Sometimes I just can't fathom it. We are in shelter in place now for 5 weeks. How has the last 5 weeks affected lending? Not just nationally, but basically here in the Bay Area.
Well, I think that we're seeing a lot of changes in our industry, and we're seeing a lot of negative effects to this SIP and to the recent bill that was passed, for the $200 trillion bill that was passed, right?
Mm-hmm.
And I think that has had a big effect on the mortgage industry. And so staying at home, for a lot of lenders, that really doesn't have an impact. For us, not really at all, okay?
Right.
When it comes to just us working from home. Prosperity Home Mortgage, we have that built-in platform. We have a lot of underwriters and processors and a lot of people remotely working anyway. So we have the bandwidth, which is awesome. So for me, I'm used to working in our real estate offices, right? And so the physical idea of working at home, that difference really no impact at all, okay? Other than me seeing everybody's lovely face like in person, and me not being able to hug everybody because I am a hugger, and so those things, I am a hugger, so not being able to do that. So those are the things that are the side notes, right? Mm-hmm. But now we're talking about what the government has done to help individuals, right? With the forbearance, with that's the main thing. What forbearance has done in an indirect way, the indirect negative effects it's having on the lending platform, which is lenders are now very, very, hesitant to get into mortgage-backed securities and servicing, okay? So nobody wants to buy the mortgage-backed securities anymore, and nobody really wants to service loans right now. And the reason for it is because we have people that are closing their mortgages, they're buying their homes, and then they're calling and saying, hey, I want to skip my first 3 payments. So can you imagine if your whole a livelihood is built on servicing loans and the amount you make for servicing loans, right? Well, these loans basically become ineligible for servicing for you to actually sell these loans. So now they're no longer eligible to sell because you have loans where people have missed their first mortgage payment.
Right.
Because once you miss your first mortgage payment, then it's not a sellable loan. So although as a borrower, it's okay for me to miss my mortgage payment, and I won't see it being reported negatively on my credit as a late. Okay. Now, and that's really important to understand. It's not going to be reported negatively as a late, right? So that's good for me. But now lenders are like, yeah, we don't want to buy loans anymore. You know, so you have a lot of that. You have some that actually can't afford it anymore. You have some that are completely having a lot of financial difficulties, right? You have other servicers that are fine because they've been in it for a long time. But I'll tell you, what we're seeing across the board is lenders that are not necessarily wanting to service loans, or we're finding that they're harder to sell because people are concerned about them being late, right? So now if you look at me, I'm a borrower, and I'm going to do an FHA loan, right? And so what happens is servicers in general, lending in general, start having this idea of who's going to be more likely to apply for a forbearance.
Right.
And this is where I get really upset about, because I think it's just so unfair. It's unfair because what they're doing is they're trying to get this idea of who's going to default, right? Or who's going to not make their mortgage payment. And so it's usually people with less down, your FHA, your VA, your USDA, and a lot of times it's your client with challenging credit scores. So what they're doing now is then they're making those rates very high.
So they're almost adding to help a larger situation. They've almost added another barrier to home ownership for people that, you know, have been trying to for a while, and especially minority and underserved communities.
For sure. And it's something that the president of our company is taking to government and challenging, because it's what is known as, it's almost disparate, right? It's disparate. It's disparate lending. So what's that mean? That means that it's kind of like discriminating, and you don't even really mean to be discriminating.
Right.
Right. So, and that's coming from way top. That's not coming from, you know, the Wells Fargos or the Prosperity Homes or the Bank of America. It's not coming from the banks. It's coming from investors, right? People that generally don't have a name, right? They're people that are buying mortgage-backed securities in bulk. And so how is this SIP affecting lending? It's harder to borrow money. You have to have higher credit scores. You have to generally plan on putting more down. You have to have more money saved to pay for higher closing costs. And there are some lenders that have cut out, you know, investment lending, jumbo.
Yeah.
So, you know, people that are buying investment properties looking for a jumbo loan, there's a lot of lenders that got out of it, you know.
So how is
thankfully enough, Prosperity, how are we doing? What are we doing to satisfy this, right?
Yeah.
Because the cool thing is that we, as a company, not only are we a correspondent bank, but we also have the ability to broker. So we're kind of like playing dodgeball, right? And we're really good at it.
Bob and weave.
So exactly. So if we can't do this, well, then we're going to offer you this, right? And if you don't qualify for this, well, then we're going to offer you this, right? So there's some things that are, you know, just really hard to find right now, but bottom line is we're still doing 80-10-10s. That means the borrower is putting 10% down. We're doing 10% seconds and 80% first. Those have been cut out completely with a lot of banks.
Yep.
We're still doing that, right? We're still doing bank statement programs, right? With a significant amount down. Again, that's been cut out pretty much across the board. But PHM, Prosperity Home Mortgage, we still have options for you guys. So, so there's a lot of things that we're still looking at, and we still have great options for the clients, and that we're trying to still make, you know, home ownership something that is available to most people, right? But
so what would be?
Go ahead.
what would be a minimum down payment right now? Say, home in Evergreen, 1.5 million. What's a minimum down payment, or I would say comfortable down payment that we know that we can get it done? Approximate credit score, et cetera. What do you think?
I would say you need a 7 for that price range. You're looking at, I believe, a 700 to a 720 mid credit score, and you could put 10% down with conventional financing.
That's not bad at all.
No,
So it
it's
can
not.
still be done.
Yeah, absolutely, it can still be done. Yes, yeah, and we still have options available for you to do that. So, and that's probably majority of my pipeline. I have quite a few. I have like 3 purchases right now that are putting less down. What I've also seen in terms of, especially locally, Will, with so many of our clients that use their stock options as their down payment.
Yes.
Right. So a lot of people, they, every year or on a quarterly basis, depending on the company that they work for, they're cashing out their stock options, right?
Yep.
And those stock options were worth a lot of money just like 2 months ago.
Yep.
Right. So their stock options, basically the value of their stock has come down by half, right? So what we're seeing is a lot of people that aren't wanting to liquidate anymore, right? Because they want to wait till the values go back up. So people that originally planned on putting 20% down or 30 or 40% down are now like, oh my gosh, can I please put less? Can I please put less, right? And the cool thing with us, again, bob and weave, we have options, right? Yes, you can put less down. And so we're seeing that as well, because the values of stock for a lot of our people here in Silicon Valley, of our Facebook buyers, our Google buyers, our Adobe buyers, so many of them, NVIDIA. I mean, all these buyers I have right now that I'm working with.
I think we've got one that's a Netflix person.
And I have Netflix. I have a Slack. I love Slack.
Yeah. Just for the folks out there, I mean, just some inside baseball. You and I are working on a deal right now where we've got you as a backup. They're going with one of the larger banks. That we're still not sure if the larger bank is going to be able to conclude the deal. I'm the listing agent. The other agent is a great agent, but the buyer, and as their want and their right, they've decided to go with the larger bank. But you just, again, being an amazing part of the team, the borrower, after speaking with you, realized, hey, we really want this house, but what's being promised on one side may not happen. So they decided that they went ahead and you're basically running a parallel loan process with them right now, so that if the other bank says in the 11th hour, oh, we're sorry, we can't do it, you and Prosperity are right there to take up the reins. You've got your own appraisal done, and they're going to be able to still purchase this home, and my sellers are going to be very happy that we thought ahead and we've got you as their backup. And I've been telling not just agents that know you, but within our network, hey, you've got to have a backup person that can definitely keep your deals going if something should happen. So again, I want to thank you just for that. I mean, just shows how amazing you are.
Absolutely. You're welcome. Yeah, so that particular client has been receiving stock option income for less than 2 years.
Right.
So we refer to them as RSU, restricted stock units. So RSU income, right? They've been receiving it for less than 2 years. And the moment I talked to the client, I immediately knew I couldn't use that income. His first, quote, big box lender told him that they could, and then came back and told him they can't, right? So he went to another big box lender who's saying, oh yeah, we can do it too. Again, less than 2 years, receipt. And you know what? That's great if they can. That's wonderful, right? But if they can't, what's so awesome, which you're so smart to tell the buyer's agent to come to me, which is if they can't, you're not going to have a transaction fall apart. You're still going to close, and we're going to still close with the same anticipated close of escrow date. You don't have to ask for an extension. The borrower's protected. All he's out is an appraisal fee. That's it, because he's just paid for 2 appraisals, right? One for us and one for them. So the other thing I wanted to mention, Will, about the differences right now with this whole SIP, this shelter in place, and what's happening in our industry is also appraisals, right? Yep. So Fannie Mae, Freddie Mac, FHA, USDA, they've all had recent changes so that they could make it easier on the appraisal process. So generally speaking, with putting 15% down, if your loan amount is what's known as high balance conforming in Santa Clara County, that loan amount is $765,600. So if your loan amount is that or less, in most cases, as long as you're putting at least 15% down, they'll only require a drive-by or desktop review, okay? And so we're seeing that, and some jumbo lenders are doing that. But generally all FHA loans, VA loans, and FHA.
Well,
they're doing drive-by and desktop.
The one that we were talking about, your guy was out there literally within 1 day. I mean, I was completely floored. I'm like, wow.
Yeah, I know. We do have a great appraisal management group, and because the appraisal management department is us. I mean, we are our appraisal management department, which is phenomenal. Right. So, generally, as you know, in the industry, people have to go to a non-affiliated third party, and they have an appraisal management company that's managing appraisals, right? And they will, not only do they manage and they divvy up and they assign appraisers to go out to appraise the properties, but they're also taking a large percentage of what our appraisers are making, right? So if an appraiser, if the borrower is paying $550 for an appraisal, you can bet that appraisal management company is taking a good, anywhere between about $100 to $150 off the top. Yeah. And so for us, we pay our appraisers what they're charging. If that appraiser's charging $500, they keep their $500. If they're charging $550, they keep their $550. We don't take a penny of it. So, and which is why we have great appraisers, because they're out there busting their butt, because they're keeping everything that they're putting out there, and the prices aren't any higher or any other. As a matter of fact, I think they're more affordable. So, so that's the thing too. We're doing drive-bys, we're doing desktop reviews, and we're working with some amazing appraisers that you guys chose for us, by the way.
Right. So I mean, I'm not going to put you out on the limb here to make any type of predictions, but what's the feeling right now in the industry? You know, controversy aside, some parts of the country are going to start, trying to open up. Other parts of the country are going to be a little bit more deliberate. We're all praying and hoping that by June we're, out of shelter in place or somewhat less restrictive. What is the feeling in the industry, about our recovery here in the Bay Area? I mean, I know we've still got a lot of pent-up demand. There's still people out there that are buying and selling. What do you think is going to be, I'd say, from the start of the summer, June, to the end of the year?
Well, I think that once the SIP is lifted, okay, economists are generally saying that we're going to see the feds come in with a boost, and possibly you might see lower interest rates again. And it's funny because, rates are pretty much in the high threes, low to high threes, depending on your program, right?
Which is still low.
Thank you.
Which is still low.
Right. I mean, when I bought my first house, but that was in the 80s, 16% was the interest rate. Now people say, oh gosh, but the values were low. But you know what though? I'll tell you something. The income, the income's not much different than when you actually compare apples to apples, right? The amount of interest rate in terms of how much higher it has gone compared to values and how much higher they have gone, right? You'll see that it's actually, the values have not increased as fast and as much as interest rates have decreased, right? So what we're seeing is, we're seeing still really record low interest rates. Below 4% is phenomenal, right? But we think that they're going to go lower. That's what economists say. Don't quote me on it.
No,
I know,
no,
I know
feeling.
we're recording this, but I do think that it will go lower. I think that lending is going to get tighter still. I think that we might still see some more changes because I don't believe we've really seen the full impact on. We had one of the biggest refi booms again.
Yeah.
Okay. We just came out of that right before the SIP went into place, right? So what we did as an industry is locked billions of dollars in loans. And those billions of dollars that we locked in loans, they haven't even all closed.
Yeah.
We have only touched like a tip of the iceberg. And the billions of dollars that we have not closed. So we're starting to, Prosperity Home Mortgage, we're having the biggest funding month in history, the history of our company. And we've been open since 1984.
Wow.
Okay. So, and we're like ranked in the top 10, but there are a lot of companies that have had their biggest month ever. Okay. Now, what happens when all those loans close and people say, I'm going to apply for a forbearance, right? What's going to happen? So that's kind of like this weird unknown factor. How is that really going to impact us? How's it going to impact the lending industry, right? Maybe everybody won't apply for forbearance, but because you don't really have to even qualify for it. So then what happens, a couple of years down the road when lenders, when people want to refinance and they see that their principal balance actually went up for 3 months, right? So lenders are saying, we're not going to report this to the bureaus as late, but you can bet that there's a balance, the principal balance is increasing.
That's right.
So how are lenders going to look at borrowers and their credit profile when they see that they applied for forbearance and their principal balance increased, right? So remember when people were doing short sales, right? There were some that said, we won't report it. And they were awesome about it and they didn't report it, right? Meaning that, I shouldn't say that. They did short sales without forcing the borrower to make a late payment. Right? So at first they were told you have to be late on your mortgage and then we'll consider doing a short sale, right? And then the lender started realizing, wait, we're really screwing up people's credit. So maybe we should just go ahead and move forward with the short sale and not force them to be late on their mortgage, right? But you still had, once they went back to the lender and they said, I did a short sale and I have nothing reported on my credit report because I never was late, but they still had a short sale. Right? So lenders made them wait, 4 years. Some lenders said it's got to come off your credit completely. 7 years, right? So how are lenders going to look at principal balance increasing, right? How are they going to look at that? That's an unknown factor. Nobody knows how that is going to be determined in underwriting. Are they going to also have to wait 4 years? Are they going to have to wait 7 years when they see that they applied for a forbearance? Right. And remember, all the lenders said, the big promise was, we're not reporting them as late. We're not reporting derogatory credit on your credit report. But
when's that other shoe going to drop? Because there's another shoe out there, and how is it going to drop? And how
there is another shoe out there.
Yeah.
That's right. That's right. So, but I think that our buyers need to be aware of that, and our clients need to be aware of that. That if they don't need to apply for forbearance, really they should not. They shouldn't.
Sound
because
advice.
You just really don't know the effects it's going to have when you want to buy another home or refinance your current home.
So let's say we find somebody that is pretty smart, because I think really and truly the smart buyers are still out there, making deals. I mean, 5 weeks ago, getting, some repairs or credits was unheard of. Now it's actually happening. So the smart buyers are out there. So they say, okay, well, we want to meet with Monique. How can we set that up for them?
In terms of asking for credits?
No, not for just getting the loan process started because you've got everything
Oh,
so
okay, I see
dialed
what you're
in.
saying.
I mean, I
Oh,
know
yeah.
that they can meet you through Zoom. I think I know you've got the online application process. It's
Yeah.
completely hands-free,
Right, right,
social
right. So
distancing,
as
physical
yeah, so as
distancing.
I was saying, we're set up for this,
Yes.
right? So how we originate loans is no different, other than before I used to give them an option, right? I could take the application over the phone. I could send you the link, and you can go into the online application. It's very interactive. It asks you questions, and you type in the answers, or we meet in person. So the only difference is now the option to meet in person is in place. Now we can do it like you and I are meeting today.
Right.
And then we can also do it where I just send the link, and they can do it at on their own time when they get off work, or when they're at home, after dinner, or early in the morning. They can do it at their own leisure. So they go to my website, they click on the button that says apply now. Once they complete the application, which should take them maybe 10 to 15 minutes, once they complete the application, they can actually log back in with their same username and their same login, and then they just upload to the same platform their all their supportive documentation that typically looks like, but not always, it typically looks like pay stubs, W-2s, and tax returns. We have a great platform where people can link their assets, and we can actually do a single source verification. So single source verification is very similar to, I'm going to call it pocket mortgage.
Yeah.
Okay. So it's very similar to that. There's only two lenders out there, two other lenders that do this, and where we can do single source verification. So now we can actually issue a full commitment to lend with just the application completed.
Wow.
Where they link their assets, and it's done pretty much instantaneous. They can get it within 15 minutes.
Now, my favorite thing to do with you is to get the full underwritten part of the process done, so that I can go in with, without a loan contingency, obviously keeping my appraisal contingency. But are we still able to offer that during the time of shelter in place?
Absolutely.
And what's the time frame on that?
So typically speaking, I take 24 hours to at least issue a pre-approval first.
Mm-hmm.
We always want to do that first.
Yeah.
Because what if during the time in which we issue we take all the information and we submit it to underwriting for a full commitment, right? What if between that time they already find a house? So at least they have their pre-approval letter immediately within usually 24 hours, 2 business days, okay? And then typically speaking, it's going to take about another 3 to 4 days after that, and you can have a full commitment.
Wow, that's absolutely amazing. There's no reason for anybody to go anywhere else, Monique. Absolutely no reason to go anywhere else.
And that single source, that other where I was telling you, we call it accelerate. That where we can just accelerate the loan. That is actually available as a full commitment as well. So sometimes you can get that type of loan done on the same day and have a full commitment.
Beautiful. So what I will do at the end of our chat today, I will make sure that we have your information available for folks, that they can contact you so that they can get their lending process underway. Mm-hmm. So I think that's going to wrap it up for us here, Monique. Again, and I'm going to call you by the nickname that we all know and love you by, Mo Money Monique.
There you go.
So Mo Money, just again, from the bottom of my heart, thank you so much for being for me, being there for me and for my clients for all these years and for many more. I don't have my glass of wine because it's still a little bit early, but cheers to you, Monique. And again, an amazing lender. This is why you have always been my number one slotted lender. You have always been the person that I send people to first and foremost. And again, thank you very much for participating.
Thank you, Will. Thank you so much for having me. I really appreciate it. I appreciate you. It's so funny when you called me passionate, and I just think about how I am very passionate about what we do. I'm passionate about fighting for our clients. I'm passionate about meeting deadlines. Yes. And not disappointing. And, I'm super blessed and honored to have the talents I have available to help people. I mean, and I know that every month I get better and better and better. And
Absolutely.
because yeah, I do. I mean, I do, and I love that because every day I talk to somebody, I get introduced to a new scenario, a new situation, um, and um, and I'm honored. I'm honored to be your lending partner, and I look forward to working with any of your buyers that you send to me. And you know what?
Yes, ma'am.
When you give out my information, I want people to understand that they can call me for any of their lending questions, even if they aren't ready to buy. Okay. I don't want people to feel like, well, I don't want to bugger. I'm not really ready to buy.
Great point.
Maybe my credit's not where it should be. Well, let's talk about that.
Consultation.
Well, I'm not sure. Yeah, I'm not sure I have enough money. Well, let's talk about that, right? I'm looking to get a gift from overseas. Well, let's talk about that, right? So it's really important that the moment people think, is home ownership something that I want to dive into, that's the time to start the conversation.
Absolutely.
Mm-hmm.
Well, again, thank you, Monique. And we will hopefully get one of those amazing hugs from you sooner than later.
Yep, absolutely.
Thank you, Monique.
You're welcome.